Stocks are pulling lower Friday, as Wall Street's first reaction to President Donald Trump's testing positive for the coronavirus was a setback. The S&P 500 was down 0.6% morning trading, and a measure of fear among investors was on the rise. Be that as it may, the moves were not near as turbulent as prior this year, when markets were first auctioning off on COVID fears. Stocks were likewise pairing their previous misfortunes, with the S&P 500 more than splitting its 1.7% drop from soon after exchanging started. The Dow Jones Industrial Average was down 116 points, or 0.4%, at 27,700, as of 10:07 a.m. Eastern Time, after earlier being down 433 points. The Nasdaq Composite was 0.9% lower. To say this potentially could be a big deal is an understatement, Rabobank said in a commentary. Anyway, everything now takes a backseat to the latest incredible twist in this U.S. election campaign. Analysts said a portion of the market's developments could be clarified by speculators developing desires for a Joe Biden win of the White House. With election day somewhat more than a month away, that could mean higher tax rates and tighter guidelines on organizations, which would restrict benefits and hurt stock costs. But analysts said a Democratic election sweep could also improve the odds for a big rescue package for the economy. One that investors call crucial and one that has been stymied so far by partisanship in Washington. That would provide a boost to markets. Additionally, working up the market's developments, Friday was the most recent report on U.S. job growth, which is generally the header for financial information every month. Businesses included less positions a month ago than financial experts expected. The third consecutive month of easing back recruiting. Various reports on the economy were mixed. More purchaser contemplations are grounded for September than business examiners expected, which is key considering the way that their spending drives most of the economy. Solicitations for contraption and other strong product. Furthermore, fortified by more than foreseen in August, yet improvement in plant orders came up short with respect to guesses. All the vulnerability is making it an effectively shaky market, much more so. Stocks have swung through violent exchanging as of late during a heap of open inquiries for speculators. Who will win the political race, and what will it mean for the economy? Will the connection between the world's two biggest economies, the United States and China, continue to become worse? Did stocks get too costly after their 60% flood to record statures through the mid-year? Lately, the predominant inquiry has been whether Washington will have the option to move beyond its partisanship to convey more aid to the economy. Additional advantages for laid-off employees and other help for the economy that Congress endorsed in March has lapsed. And speculators have been clamoring for more help. Cutbacks have remained adamantly high the nation over. And parts of the economy have eased back with the help from Congress gone. The House of Representatives passed a Democratic $2.2 trillion package Thursday night. However, it has minimal possibility of traversing the Republican Senate. Talks among Democrats and Republicans on a trade-off are proceeding, however wariness is high. Trump's positive COVID-19 test additionally features the preceded with spread of the pandemic. The White House doctor said the president is required to keep completing his obligations, without disruption, while recouping. However, the potential for a further increase in diseases as the climate turns colder is raising concerns that administrations may put some more limitations on organizations. The Walt Disney Company effectively declared not long ago that it would lay off 28,000 employees, generally considering limitations at its amusement stops due to the COVID. The yield on the 10-year Treasury rose to 0.69% from 0.68% late Thursday, after pulling back from a previous misfortune. In Europe, stocks likewise managed their misfortunes as the day advanced. Germany's DAX lost 0.7%, and France's CAC 40 fell 0.4%. The FTSE 100 in London dropped 0.3%. Exchanging in Asia was slight, with business sectors in Shanghai and Hong Kong shut. The Nikkei 225 record shed solid early gains to lose 0.7% after. The Tokyo Stock Exchange continued exchanging following an all-day blackout because of a specialized disappointment. Reports that the Japanese government is planning new upgrade measures to enable the economy to recuperate from a drawn-out plunge decline caused by the COVID pandemic gave just an impermanent lift. Stocks fell further after Trump's declaration.